Hello viewers, welcome to my channel. I'm Hasham Ali Khan. In this video, the next accounting standard, that is AS10, I'm going to explain. In the previous video, up to 9 accounting standards I have completed. One video on each accounting standard. AS1, disclosure of accounting policies. AS2, valuation of inventories. AS3, cash flow statement. AS4, contingencies and events occurring after the balance sheet date. AS5, the net profit or loss for the period, prior period items and changes in accounting policies. Then AS6, that is depreciation, and this accounting standard was withdrawn. So AS6 is not there. Then AS7, construction contracts. AS8, accounting for research and development, again withdrawn. AS8 is not there. Then AS9, revenue recognition. These are the accounting standard already I have completed in the previous videos. So if you have not watched those videos, I suggest you go to the playlist of my channel. Select the subject accounting standard. Select each video for each of the accounting standard. Be perfect. In examination, we don't know which accounting standard will be asked. So now, in this accounting standard 10, the title of the standard is property, plant and equipment. Simply it is called PPE, property, plant and equipment. So before explaining the detail of this schedule of this accounting standard, take the screenshot of the points, then I'll explain all the points in detail. Now AS10, property, plant and equipment. This accounting standard comparatively is a big one compared to other accounting standard. So this accounting standard AS10, I am splitting into 3 parts. So first part in this video, see carefully what I am going to explain. AS10 prescribes the accounting treatment for properties, plant and equipment. So how the accounting treatment will be done for property, plant and equipment, that is explained in this accounting standard. The main aspect covered by this standard are recognition of the asset. See here, 4 parts are explained, covered in this accounting standard. The first item covered is recognition of the asset. See here, recognition of the asset. Because we have to recognize, measure and present in the financial statements. So first of all, we have to recognize whether it is an asset or not. Secondly, the determination of the carrying value. Second point. First, we have to recognize the asset. Secondly, carrying amount. What is carrying amount? I'll explain here the concepts which are used. So first, recognition of the asset. Second, what is the carrying amount of that asset? Asset is property, plant and equipment. Thirdly, depreciation charge. How much is the current year depreciation and how much is the accumulated depreciation over the period of time? Last one, if there is any impairment losses. If there is any impairment losses, that should also be shown. Treatment, how you have treated the impairment losses to be recognized in relation to them. That's it. So what does this accounting standard deals with? The accounting standard 10, property, plant and equipment, deals with accounting treatment of the recognition of the asset, the carrying amount of the asset, the depreciation charge and accumulated depreciation, and if any impairment losses are there. So these are the items that are covered in this accounting standard 10. So now I'm going to explain you about what is property, plant and equipment. What does it mean? What it includes? These are the tangible items. Tangible means the assets which we can see, which we can touch physically. That is those assets are present. So these are the tangible assets that are held for use in the production and supply of goods or services. So those tangible assets which are held by the business in order to produce the goods or provide the services for rental to others. Secondly, those assets which are held by the business and given to others on rent or for administrative purpose. Many equipments are there which are used in administrative purpose and the expected to be used during the period for more than 12 months, and the asset is expected to be used for more than 12 months in the current accounting year. These items are called property, plant and equipment. Again I repeat, so these are the tangible assets. These are the tangible assets which are used in the production or providing the services, or these are the assets which are given on rental use, or these are the assets which are used for administrative purpose. And lastly, these assets are meant to be used for more than 12 months, more than 1 year. Then AS10 deals only with tangible assets. Remember, two types of assets are there: tangible, intangible. The intangible assets, there is a separate accounting standard, AS26, but here only tangible assets are covered under AS10. Now, such assets should be held in use for production of goods or services, or for administrative purpose, for selling and distribution, or for discharge of any other function of the enterprise. Explanation has been given. So these tangible assets must be used in order to produce the goods or in order to provide the service, or these are the tangible assets which are used in administrative purpose or selling and distribution purpose, or held for any other purpose in the enterprise. So it should be held for a period of more than 12 months and must have some future economic benefit. That means if a tangible asset is there whose life will expire within 1 year, those items are not covered under AS10. That means AS10 will recognize only those tangible assets whose life is more than 1 year, more than 12 months. It is expected that the enterprise will get the benefit from that asset for future period of time. Not only during the current year, but also in future period, the enterprise is going to get the benefit, economic benefit from those assets, either directly or indirectly. So far I have explained you how this AS10 will be dealt. What is the purpose of this AS10? Secondly, what do you mean by plant, property and equipment? And thirdly, recognition. I told you just now that this AS10 covers the topics of recognition of the asset, finding out the carrying value, finding out the depreciation, finding out the impairment of losses, and how it should be disclosed in the financial statements. That is a purpose topic of this. So recognize. How to recognize the asset, property, plant and equipment? The cost of an item of property, plant and equipment should be recognized as an asset if and only if two conditions are given. If both the conditions are satisfied, then only those assets are recognized. Otherwise, those assets are not recognized. What are the two cases? The first, it is probable that for the future benefits associated with the item will flow to the enterprise. That means once an asset is purchased, it is expected that in future the enterprise will get the benefit from that asset. That means there should be an expectation that in future benefits will be derived by the enterprise from those assets. Future benefit must be there. Secondly, the cost of the item can be measured reliably. So we can easily, reliably calculate the value of the asset. If we cannot be able to calculate accurately, reliably the value of the asset, we should not include in this assets. So two conditions are there, then only we recognize the asset under AS10. First one, probably there should be some future benefit accruing from the asset to the enterprise. Secondly, the cost of the asset can be reasonably be measured. Then items such as spare parts, then standby equipment and service equipment are recognized in accordance with this standard only if they meet the definition of property, plant and equipment. There are some items, those items are called spare parts or standby equipment or service equipment, etc. So if these items are there, it will be recognized only if it falls within the definition of property, plant and equipment. If these items, spare parts, standby equipment and service equipment, if that does not satisfy the condition of property, plant and equipment, then it will be included under inventory. It is not an tangible asset covered under AS 10. It will be separately treated as inventory. That point you have to remember for recognizing the asset. Now, there are some terms which has a technical meaning in business. So here the AS 10 has specifically defined some of the terms which are used in the accounting standard. So what are the terms which are frequently used in accounting standard? First one, carrying amount. So what is the meaning of carrying amount? The cost of the asset minus accumulated depreciation. Simple meaning, if an asset is purchased 5 years back for 1 lakh, for 1 lakh rupees, asset was purchased 5 years back. During the last 5 years, 30,000 depreciation was provided. Accumulated depreciation 30,000. So 1 lakh rupees was the cost, 30,000 was the accumulated depreciation. So 1 lakh minus 30,000, you will get 70,000. That 70,000 is the carrying amount. Specific meaning given by AS 10 is the amount at which the asset is recognized after deducting accumulated depreciation and accumulated impairment losses. That means the value of the asset after deducting the accumulated depreciation and impairment losses. If any, accumulated depreciation will be there, but impairment losses, sometimes it is there, sometimes it is not there. If it is there, deduct impairment losses, then we'll get the carrying value. Simple words, we can say carrying amount is nothing but the book value of the asset. In simple words, we can understand it as book value of the asset. So this is the meaning of carrying amount. Now next one is cost. We can provide the depreciation only when we know the cost. And the cost will be considered for recognizing the value to be shown in financial statement. So what is the meaning of the term cost? Here specifically the wordings are given by AS 10, so you have to remember. You should not write in lengthy words or your own words. That means it is the amount of cash or cash equivalent paid. Remember, focus on the wording. It is the amount of cash or cash equivalent paid or the fair value of other consideration given to acquire an asset at the time of its acquisition or construction. At the time of purchase, at the time of acquisition, what is the cash paid or cash equivalent paid or any other fair value of other consideration given? Not necessarily in cash. Sometimes we purchase the asset by giving some other form of payment. Example, machine is purchased, but in return cash is not paid. Shares are issued. This is called other consideration. The fair value of other consideration incurred at the time of acquisition or construction of the asset. That is called cost. In simple word, cost is what was paid to acquire the asset. Simple words. The cost means the amount paid at the time of acquiring the asset. That is the meaning of the term cost. Next is depreciation. Simple words. Depreciation means the cost of the asset which is spread over its economic life. The cost of the asset spread over its economic life. Example, we have purchased an asset for 1 lakh and we estimate that the life of the asset is 10 years. So 1 lakh rupees will be spread over 10 years. So every year whatever amount we get, that amount is called depreciation. Depreciation is a charge. So it is a systematic allocation of the depreciable amount of the asset over its useful life. Whatever is the depreciable amount, that depreciable amount is spread over its useful life. That is called depreciation. Now depreciable amount. Depreciable amount means the amount for which is provided for depreciation. Example, if the asset is purchased for rupees 1 lakh, useful life 10 years. After 10 years, we can be able to sell away. Scrap value of the asset is 10,000. That means we have purchased the asset for 1 lakh. We can use the asset for 10 years. After 10 years, when we sell the asset, we can fetch 10,000 scrap value. The depreciable amount is the cost minus residual value. The cost is 1 lakh and the residual value is 10,000. So 1 lakh minus 10,000, 90,000 is called depreciable amount. So it is the cost of an asset or other amount substituted for cost less its residual value. From the cost, we deduct the residual value or scrap value. We get depreciable amount. Next one is fair value. The fair value, it is the amount at which an asset could be exchanged. Fair value means the amount at which the asset can be exchanged between the parties. One party is the seller, the other party is the buyer. So what is the value at which the asset will be exchanged from the seller to the buyer in an arm's length transaction? When both the parties are ready for the transaction, what is the fair value? What is the value at which the asset will be exchanged between the two parties? Next one is impairment loss. Sometimes we compare the book value of the asset with the market value. Suppose the book value asset is more than the market price. Example, in our books, the machinery is showing a book value of 50,000. 50,000 is the book value. The carrying value in the books, 50,000. But in the market, if we sell away the machine will fetch 40,000. That means our book value is more than the market value. The excess of book value or market value is called impairment loss. So 50,000 is the book value, 40,000 is the market value. So 10,000 rupees is the impairment loss. So it is the amount by which the carrying amount of an asset exceeds the recoverable amount. Next comes gross carrying amount. Gross carrying amount means without deducting residual value, without providing any depreciation. Example, we have purchased the asset for rupees 1 lakh. The life of the asset is 10 years. So 5 years are already over. We have provided depreciation in 5 years, 40,000. So 1 lakh rupees is the cost, 40,000 is the accumulated depreciation. If we deduct accumulated depreciation, we will get the carrying amount. 1 lakh rupees is the cost, 40,000 depreciation, 1 lakh minus 40,000, 60,000 is called written down value or carrying amount. But if we do not deduct the depreciation, then 1 lakh rupees is the gross carrying amount. Without deducting depreciation or impairment loss. Without deducting depreciation or impairment loss, it is called gross carrying amount. So here it is the cost or other amount substituted for cost in the books of account without making any deduction for accumulated depreciation and impairment losses. That is called gross carrying amount. Next one is residual value. In simple, we call it as scrap value. At the end of its economic life, if we sell away the asset, how much amount we can fetch? Estimated amount, how much we can fetch at the end of this economic life, that is called residual value. So here it is the estimated amount that an enterprise would currently obtain from the disposal of the asset after deducting the estimated cost of disposal. Suppose we assume that 1 lakh rupees is the cost of the machine, life 10 years. After 10 years, we can be able to sell away the asset for 10,000, but we have to incur a cost of 1,000. We have to incur a cost of 1,000, then only we can be able to sell it at 10,000 at the end of its economic life. So residual value means 10,000 is the amount we can get, and 1,000 rupees we have to spend. So 10,000 minus 1,000, 9,000 is the residual value. Next one is useful life. See here, every asset is assumed to have an economic useful life. During that economic useful life, an enterprise can get the benefit. That means it doesn't mean that once you purchase the asset, it will go for a long period of time without any end. Unlimited life. There is no asset with unlimited life. Every asset will have limited life. So it will be estimated. Estimated life we have to ascertain. Only after ascertaining the estimated life, we can be able to provide for depreciation. So what is this useful life? It is a period over which an asset is expected to be available for use by an enterprise. It is a period during which the asset is available for use in the enterprise. And the number of units, the number of production or similar units expected to be obtained from the asset of the enterprise. Secondly, the expected number of units of production we can get with the help of this machine. And this machine can produce how many units? That is also called useful life. So useful life can be expressed either in terms of life period, years, or it can be expressed in terms of units. How many units we can be able to get? That is useful life. The next one is class of assets. Class of assets means a group of assets of the same nature. AS10 doesn't require that depreciation should be provided on individual asset. Now AS10 requires all similar assets will be put under one head, and that is called class of assets. Example, a number of equipments are there on which same rate of depreciation is applicable. So we can group all the equipments with same rate of depreciation under one head called class of equipment, right? So a group of assets having the same nature, that is called class of assets. Class of asset is a grouping of assets of similar nature and used in operation of an enterprise. The following are the examples of separate classes of property, plant and equipment. The example of classes are land. Different lands are there. All the lands can be grouped under one head. Then land and building, machinery, ships, aircraft, motor vehicle, furniture and fixture, office equipment, bearer plants. These are the examples of classes of assets. So all the different classes of assets should be disclosed in the financial statements. Lastly, AS10 does not prescribe any particular unit of measure for recognition. When assets are to be recognized, in what units, in what terms it should be recognized, it is not given in AS10. AS10 says whatever unit of measurement you take, you can take, because every business have different nature. So according to the nature of the business, the measure of unit of measurement will differ. So there is no specific method that all the business houses must use the same unit of measurement. Different businesses may have different units of measurement. Thus, the unit of measurement can be different according to specific circumstances of an enterprise. So, every enterprise is at liberty to adopt any unit of measurement. AS10 does not prescribe any single method of unit of measurement. That's all. So, in this video, I have explained you what is AS10, accounting for property, plant and equipment. It is nothing but the recognition of the asset and calculating the carrying amount, calculating the depreciation, finding out the impairment loss. All these are covered. Accounting treatment of all these are covered in AS10. Then I have explained you what do you mean by property, plant and equipment. Then recognition. Which are the items should be recognized and which items should not be recognized. Conditions are given. See whether if conditions are satisfied, it will be included in this accounting standard, otherwise not. Then different terms which are used in this accounting standard 10, those terms I have explained. Inshallah, the same accounting standard 10 will be continued in the next video. So if you want the complete perfection on this accounting standard, watch all the videos, don't join in between, don't skip in between. Inshallah, we'll continue our discussion in the next video.